Welcome to our weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. As always, trading involves risk of loss and is not suitable for all investors. First market we're going to take a look at will be the Australian US dollar. We talked about the 94 even level, just above 94 even being resistance. That's a pretty strong risk tolerance threshold level. Here, let me show you our RTT. Speaking of risk tolerance thresholds, let's look at our RTT ratio, and I apologize if not all these are updated. I want you to focus on the Aussie here. To me, you're in a neutral market. We talked about that a couple weeks ago too. Not the best trading vehicle, and that's definitely held up. That's the fact. You had a whole lot bigger trend moves across the board. Boy, this week you really had some serious trend moves. You didn't in the Aussie though, and I want you to look at that 25-day pattern kind of in limbo. So your short-term patterns are up, your intermediate to long-term patterns here kind of down. So you're kind of in the middle there. So, you know, I almost like taking a flyer and taking a shorter term, taking an intraday sell signal up around that 94 even level and maybe manage that in a way where if it turns, I get lucky and it turns into a long-term trade, you know, take it on a 15-minute or 60-minute chart. Maybe manage half of that trade on the lower time frame. I take the trade on, but then keep an eye on the big picture. Try to manage that trade on a 4-hour or daily chart to see if it does turn and you can get a long-term play on it. But you know that is kind of a gamble. Back to that ratio, and that really guides everything we do. You can see you're neutral. You can see short terms up, and these little bit longer term ones are down, and that 25 days key. So you know, let's look for what's going to happen there and just go along with it. Next market will be the dollar Swiss, and boy, remember that level from last week? I said, that's our upside target, intermediate upside target. Boom, they got there in a hurry, didn't they? Yeah, just Friday they got just below it. So big rally here, big move. I think, you know, to put things in perspective, you have to pan out to those longer time frames. Here's a monthly chart. I think there's still some room on the upside here. You look at that chart, and you could call this week. You draw a trend line there. And you can say, well, you're just breaking out now, right? So we still think there's plenty of room on the upside in this market, but it wouldn't surprise me if dollar Swiss finally does start to take a breather here, similar with the dollar pairs. Speaking of which, here's your dollar index. Big rally there, kind of blow off. That's what you look for, a climax rally. So many times the market will pause now, will signal it's ready for a counter trend move when you have a massive climax like that. So it wouldn't surprise us. Here's another one where you have to pan all the way out to a monthly to get perspective. What did we say? Was that last week or 2 weeks ago? We said, you know, the real breakout comes when this market clears 84. Look at that. This is a monthly chart. This really puts things in perspective. The dollar index hasn't even broken out yet. So you guys on the intraday or even your daily charts where you're thinking you're seeing big moves, you're really not yet. Okay, when you look at this market on a relative performance over the last 20 years, you could see that, yeah, that's a good sized move, but it's a relatively small move relative to what this market can do. So 84 even, big level now. You know, wouldn't surprise me if after this climactic move here, look, you're just below 84 even, if you start to you take a breather here. Still very much long-term bulls on this market. Dollar index. Here's the euro. Look at that purple line. Boy, you retraced a full 50% of this, over 50% of the Draghi rally, which kicked off back in 2012 when Draghi said, "Don't get short the euro." He knew what he was talking about. He should in his position. And since then, that market's pretty much that rally we feel has become unraveled, and you're in the process of shifting, reversing this long-term primary rally, this primary pattern here. So like all the major currencies, it's been a big move short term. However, when you put it in a historic perspective, and that's what we're going to do with the futures chart here, and we pan out to the monthly chart, and this is why we call this the golden age of currency trading, because if you know what you're doing, man, you can have a lot of fun. The traders love sustained moves. Here's a monthly of the euro, and you look where this market's come from. Over 10, 12 years ago, you start to imagine, well, there's a lot of room on the downside, isn't there? And we feel that is the case. There is a lot of room on the downside, so plenty of room down below in the euro. Intermediate term, shorter term, I guess you'd have to say, the market may be after a big climactic move like that. It wouldn't surprise you put one more low in there, and then it comes up for air and you start to get some consolidation. The gold market, we've not been a fan of gold. We think that that the pattern you see very clearly here, one of lower highs, right? Lower highs, and we think that's going to be the case. So we think there's probably more downside than not. The 1240 area will be an interesting one to follow to see if that level holds. Pan out to a bigger picture here. Take a look at the weekly gold, and you can see clearly that you're in a bear phase marked by long-term lower lows, lower highs also. And you have to say to yourself, even if you hold out some hope for gold, you have to be disappointed about its performance recently. A little bit longer term, that 1200 is going to be an area to watch for the gold market. Last market we'll cover will be the dollar yen. Let's drop down to a daily chart, and I'm going to give you a perspective. Here's how you make money in trading. You have to have this type of mindset. Our first buy signal in dollar yen, we love any kind of formation on a purple line. Any kind of formation on a 50% retracement definitely bears watching. Here's your first low. Here's your second low. That's a double bottom, right? First bottom, second bottom. Here's our buy signal right in here. Okay? That buy signal was right, that came all the way back at the end of May. This trade really didn't come to fruition until right here, almost all the way through August. So you have to take the longer term view. Literally, that's how you have to view things to catch big moves. There's nothing wrong with taking a buy signal in late May and sitting tight and still being in that trade at the beginning of September, because that's how you're going to catch the big moves. You guys that want to profit from this game, that's how you have to view things. You have to see the big picture. You have to understand that you're going to have to hold trades for longer than you think. You're going to have to wait for market moves to develop. I'll leave you with some words of wisdom from one of my mentors, great trader, great man in my estimation. Bill Williams said, harmony between your thoughts and actions creates a solid trading foundation. You have to, we talked about this last week, your thoughts have to be aligned with your actions. My name is Jay Norris. I teach trading at Trading University, and I'll catch up with you guys next week. Thank you.